It looks like the heat is kind of made people a bit tired, a little restless. I know it's pretty humid in here. This is the last panel. I know there's been a lot of information, so never fear, we have music, we have drinks after this, but we have a really amazing panel. I don't know if any of you have been in crypto long enough to recognize all these folks on stage, but this is a pretty top-notch panel. So I'm gonna start. My name is James Beck. I work at Avara. I'm a marketing director. We are sort of doing a panel about DeFi and what is holding it back from global adoption. We're going to talk a little bit about various protocols that people are working on. So let me just have everyone introduce themselves and tell me a little bit about what you're working on.
Sure. So I'm Camila Russo. I'm the founder and CEO of The Defiant, which aims to be the best source of DeFi and Web3 information. And so, yeah, that's what we're working on all day, providing the best news and content on DeFi.
And Cami also wrote The Infinite Machine, which, if you haven't read, is a great history of the sort of people that created Ethereum. But
thank you. Yeah.
Hi, it's my turn.
Please, Marc. Yes.
Hello, everyone. I'm Marc Zeller. I'm the founder of the ACI. We are the largest delegate platform on the Aave DAO right now. And we are a service provider to the DAO. We implement governance decision. So English word in the forum, we transform that into actual code that can be enforced and modify the Aave protocol. And we lead growth and business development initiative at the benefit of the DAO.
And what does the acronym ACI stand for the audience?
It's Aave Chan Initiative, because we are a bunch of weebs.
Nice.
Hi, I'm Pedro, founder of WalletConnect. You may recognize me online from a lot of wallet standards. Pretty much anything that touches wallets, I'm somehow involved. Not just in Ethereum, but in other ecosystems like Solana and Cosmos. And WalletConnect today supports more than 600 wallets, and it's a very wide interoperability protocol.
Thanks. And you, Alex?
Hey, I'm Alex from the product team at Uniswap Labs. Uniswap Labs is the creator and maintainer of the Uniswap protocol, past versions and going into future versions. We're rolling out V4 this year, finally. And I think excited to talk on this panel. One of the things we're really excited about is moving Uniswap to more of a platform where the entire DeFi community can be building on top of it. And I'm a big believer that getting the builders building is the key unlock to making DeFi more accessible. So yeah, excited to get into it.
We're going to have you define intense in a little bit.
Okay, awesome.
Okay, so starting just really big picture, this is a question for you, Cami, but ever since I joined Ethereum in 2017, we've talked about Ethereum, but broadly any sort of decentralized finance as increasing accessibility. Anyone in the world with an internet connection can get things like a loan or swap a token. Cami, you do a lot of reporting both on stories but also protocols and apps. Where do you see this to be true? Where has global accessibility been unlocked via DeFi?
So I think stablecoins have become pretty much undeniably the biggest use case for DeFi to go beyond speculation and just trading tokens, but for people to use crypto in maybe their everyday lives. So a big example that I love is how Argentines use crypto, and I think it's one of the few cases where there's actual mainstream adoption in everyday people. Everyone has crypto in their phone, and they use it to pay and just to save, because the Argentine peso is famously being inflated away. There's currency controls that means that people don't have access to regular dollars, so they go to digital dollars. So that's a big way crypto is being used and is increasing financial adoption and accessibility. But I think it's more of an exception. So
yeah,
it's happening in Argentina, maybe in places like Venezuela. There was a big Bitcoin mining frenzy a while back, and there's a few examples like that. There was also the rise of play to earn with Axie Infinity in the Philippines. So you have people kind of supplementing their income with crypto. But again, like these are exceptions to how DeFi is mostly being used. Right now, DeFi is still mostly being used to speculate rather than increase financial access. I'm not sure if, you know, maybe others in the panel can.
I have the feeling like the main use case of DeFi, when we look at the number from the vision of Aave, the protocol itself, and I think Uniswap is not too far from that, is 95% of the TVL, so the liquidity we have on Aave, and 95% of the actual revenue is only 6 tokens. Because there's tens of thousands of coins out there, and a lot of them are shit coins. But if you look at the actual figure, we make money on ETH and ETH derivatives with Lido and InterFi. We make money on USDC, we make money on USDT, and we make money on Go, which is the stablecoin on Aave. Everything else is a rounding error on the balance sheet. When you look at the actual use case, why do people use Aave? They have some ETH, and they want to do leverage taking because they want to have more ETH in the future, and their position is actually delta neutral because they believe in Ether and they believe in the future of Ethereum, but that's an investment on the long term. What they want by using Aave is to increase the yield generated by their Ether doing leverage taking. But that's not really a speculative use case in it. There's another kind of people that has some Bitcoin, for example, and they will bring that thanks to BitGo in the EVM ecosystem. And they don't want to sell their Bitcoin, but they need to pay the rent. So what they do, they use their Bitcoin as collateral, and then they borrow some Go and transform that Go into fiat into their bank account to pay their bills. That's not speculation as well. And using ETH or Bitcoin as collateral is actually one of the biggest use cases of Aave. I do believe that there's a part of pure speculation, meme coin or whatever in the industry, but when you look at the figures, the actual money makers and the actual use case at scale, that's not the main stuff.
Right, but it's investment.
Yes.
Really, yes.
Well, finance exists.
Yeah, yeah.
I'd love to hear from you, Alex, at Uniswap. Uniswap has built an entire, you know, multi-billion-dollar protocol based on people trading. And I mean, obviously a lot of the top pairs are similar to Aave, but there's a lot more speculation possible. It, you know, definitely lends itself to a casino idea of being able to swap any token. So maybe you can comment on that a little bit.
Yeah, it's a good question. I think maybe one of the sort of elephants in the room is that, you know, we do talk about these really aspirational use cases for DeFi, but the truth is, like, a lot of the activity that happens right now, especially when you look at it on a sort of per user basis, so not by the amount of money moving through, but by the actual number of users, is a lot of speculatory behavior. And I think that can go very poorly, but we can also think about it as very helpful, that we have this group of users who are, have very strong risk appetites. Maybe some of the degens are in the audience right now. And they're really like on the frontier of like what we can do with this technology. And the amount of like transactions, the amount of users there are, like we can learn a lot about what it looks like to interact with these technologies from those users so that we can bring those learnings back into some of the like more mature use cases. So I think it's sort of a champagne problem that we have right now, that we have a lot of speculative users. We have to like make sure that we're maintaining our sort of like crypto values as we like interact with that. But there's like a lot of learnings that we can pull out of it and make sure that we are building this future of finance.
I mean, that's a pretty sober take. It's sort of like saying anyone in this room who's maybe supplied or swapped or taken out a loan is a sort of early user of crypto, and we're like hardening these financial rails for eventual use cases. I mean, what do you think is holding back someone who maybe needs, maybe can't over collateralize a loan and wants a loan but doesn't have financial access? Is that, or is that kind of irrelevant to what's actually happening in reality on Ethereum and EVM chains?
I mean, to some extent, I feel like the speculation is necessary because the vision of a global open financial platform is just too big to realize overnight. And yes, it's not been one night or two, it's been years, and it's still not realized. So speculation is actually allowing us to build it, right? sure, a lot of this is a lot of infrastructure being overvalued, but then it's actually building the rails that will eventually create a world where, you know, I think with COVID, what we actually saw is actually the mainstream audience realizing that inflation is actually real. It's no longer 1%, maybe it's 8%. And then it actually ended up pushing people to find alternatives. And then you end up having, for example, a little bit more stable markets like North America and Europe to actually seek other investing opportunities. And those investing opportunities actually generated yield and possibility for people to borrow in more developing countries. So people in Latin America, Asia Pacific, and Africa could actually borrow money from these investing opportunities in Northern and Western America. So it essentially redistributed wealth across the globe, and this would have never been possible without the speculation part of it.
Yeah, that is interesting. I mean, I don't know if anyone has seen some of the like data reports from Chainalysis. At one point, MetaMask even publicized some of this data, but highest crypto adoption in the world in order goes, you know, Philippines, Nigeria, Vietnam, and then Western Europe and the United States is definitely in top 25, but not as high as some of these other countries. And so we're seeing a lot in like Asia, Latin America, and Nigeria. And I mean, these are like also enormous economies. People talk about them as emerging markets, which I think is just ridiculous as a term. But
I think it makes sense in terms of process. What we are building right now in our phase of the current phase of the industry is that we are finding product market fit. And DeFi is one of the first and biggest use case and product market fit of the blockchain industry. What we are doing is create a market that generates actual economic activity for the first time, because it used to be pure speculation. It used to be nobody willing to pay transaction fee to use the Bitcoin blockchain for a long time, or to use the Ethereum blockchain. No, those blockchains are sustainable in terms of security for the long term because of the actual user activity. And those protocols, with this actual activity, generate funds that can be redistributed to new initiatives. Because when you see those 4 nice logos here, well, it's true, the money that organized the day today comes from the profit of these 4 protocols and the investment of those protocols. So the activity that we did generate funds that can be reinvested to onboard more people. And I think it's a virtuous cycle. The more we grow in our activity, the more investment we can do to be more inclusive.
so maybe you could tell us, this is partly a selfish question because I'm curious. I've seen you in the governance forum. You were, you know, part of the early ETH lend even before it became Aave. And clearly, you know, the lending protocol is one of the first apps ever on Ethereum. And now the DAO is making pretty good revenue.
Yeah.
Can you tell me a little bit more about also, in addition to the revenue, what is one of the reasons and motivations to create another stablecoin? We were talking about USDT and USDC, and Go is a new stablecoin. Maybe tell me about the motivations.
I think when we talk about inclusion, when you have, firstly, there's a lot of synergy that you can have as a liquidity protocol or a lending protocol and a stablecoin. Because what is a stablecoin, at least a decentralized one, is to have some collateral to value some debt. Because every stablecoin and even the fiat system is a debt system. So you need to have some collateral somewhere to create some debt that can be used and injected within the economy. So if you look at this way, there's not so much path in the journey between operating a lending protocol and operating a stablecoin. So it was a natural progression for Aave. And when you generate as a protocol the stablecoin, the protocol itself is the liquidity provider. So in a liquidity protocol, you need to attract external users that will provide liquidity that can be used and be borrowed as a counterparty of collateral. When you are the creator of the stablecoin, the protocol itself is the LP. That allows more flexibility and more granularity in the policies that you implement and the strategy that you have with the collateral. That allows us to have maybe a speculative market for Go with ETH as collateral where people will do leverage, and why not? Because that's a use case of fairness. Or it will maybe allow us in the very short term, because the governance voted for that, to have Go on Silo. And Silo is all focus on emerging markets and probably the less speculative part that we're going to have on Go. And the good thing is that when you create a stablecoin, you can do both, because the money you will make on one market, you can mobilize that on the other markets. And for us as a protocol, it's important to have a neutrality and to focus on every single vertical, because everything makes sense. We don't have to say, oh, this is evil, this is good. I think the diversity is interesting.
So, I mean, that I
Let's
think
go.
that makes sense to me. I mean, Cami, you've been doing so many interviews with different founders, and the Defiant really started with DeFi, and you still probably have to think about who your audience is. Certainly, it's people in our space, but do you think about who you're writing for and maybe wider audiences? And I guess, kind of my question is like, if you were to grade this community and the people that you interview, how well do we do in trying to explain DeFi concepts to someone who may want to use them, or someone who may need to use them?
Okay, so two separate questions.
Yeah.
The first is our audience, and I have a pretty good idea. Like, from just like our Google Analytics numbers, I know that most people reading the Defiant are in the US and Western Europe.
Okay.
And then there's a long tail of Asia, South America. It's like 90% male, and that's just the rough makeup. But like, I've spoken with, I've done like 100 user interviews of subscribers of the Defiant newsletter. Like, literally have spoken to 100 subscribers, asking them, who are you? Why are you reading us? And the answer is basically, I read the Defiant because I want to make money. And
cool.
So
financially motivated.
Yeah. So and it ties back to this panel. It's like, yes, like a lot of us in crypto have this like really lofty ideals, and I think it's right to believe that crypto can change the world for the better and create a more accessible financial system. But I'm convinced, just like from interacting with my readers for like almost 5 years now, the reason why people are in crypto, like, I don't know, top 3 reason, like for most, is because they want to make money. And so that's why, like investment and speculation is the main use case for crypto right now. But I don't say that it might carry like some negative connotation, but I honestly don't. Like, I agree with what some of the other panelists have said. Like, I think it's just the stage of the cycle of the of the maturity of DeFi that we're in. I think DeFi is too risky right now. It's very early in the stage of development to even be prepared to have just like regular non-technical people who are not like investing and in it and trading all day, be using it. I mean, having to the typical UX flaws, confirming transactions, having to have gas, having to store your private keys, having like a bunch of money in a hot wallet, phishing, like all of these like very risky situations that happen when you're dealing with crypto. I simply, I think it's the right. I think it's good that it's being used right now by people who have capital to be able to take that risk.
Yeah. You were talking about that a little bit earlier. Can you tell me about sort of Uniswap's take on this, and that generally these risks do kind of make crypto still seem like the Wild West to both financial regulators but also traditional finance? Like,
I think, and maybe just like step back a little bit. I think, to put on my product hat, one of the like very common failure modes in product is like, a product manager goes and talks to a bunch of users and they come up with this great, perfect product spec. The engineering team goes and implements it. They turn it over to a marketing team and no one uses the product. And the product manager goes back and says, marketing team, you're not explaining this well enough. That's why no one's using the product. And 9 times, and maybe I'd even say 10 times out of 10, it's not that the marketing department's not explaining it. It's that you missed some pain points in the development of the product that are not being addressed. And so I think a lot of times, like especially in such a sort of like idealistic industry, we sort of delude ourselves a little bit and say like, why is no one using it? Like, you know, obviously a wallet is better than a bank account, but the wallet doesn't have FDIC insurance. And so like, you know, if somebody makes a wrong move, they're going to lose all their money. And we sort of like move over those things. And so I think it's sort of something that we as an industry need to do a better job of, is like actually staying true to what are the problems that our users or the users that we want to target have, and make sure that we are actually like addressing all of those problems. And like that's the only way that we're going to get more people who are not currently in this industry into this industry. So I don't know, maybe I took that a slightly different direction, but
No, I like that. I mean, Pedro, we were talking about wallets. Wallet Connect has been, in some ways, filling the need of the fact that maybe our original sin is always having to connect wallets in the first place. But, you know, tell me a little bit about, like, obviously, account abstraction. We have Privy Wallet. There's a lot of efforts at making wallets as easy as signing up with an email address or using passkeys on your phone. What is Wallet Connect thinking about all of this and the advancement of the wallet space, given how long you've been around? But also, I guess, maybe what can you say about people still using Wallet Connect and apps relying on Wallet Connect?
Yeah, well, at first I would say, like, actually I don't think people don't use crypto because it's not FDIC insured. Because I don't think most people actually know that their bank accounts are FDIC insured. It's not a very well-known fact. They kind of just trust banks because they go on the street and they see an actual building, which you can't see that with crypto. I know that
maybe a better example would have been you can take back a credit card payment that was
right.
scammed.
But I don't think
Right,
I don't
yeah,
think
like
I don't think
reverse,
people do those very rational decisions about actually comparing features. My credit card does X, my wallet does Y. It's a much more humane like decision where does my friend use it? Did my friend get rugged? Have I heard some bad news? And it's very emotional, actually. You know, when before crypto, I was working in a neobank, and one study that we found is that like capturing people in their 18 was perfect age, because once you actually hook them in one bank, they pretty much stay until they're like 30 or 40. Pretty much most people would change bank accounts only when they would get an actual mortgage that actually justified them to change a bank account.
I mean, you're describing myself. So.
Yeah. So basically, that was the whole business. Before I was working in crypto, it was like, let's hook these university students in our bank accounts because they're pretty much not going to want to change until we have mortgages, and we'll figure out mortgages later, you know. But then again, like regulation was so bad, I just like shifted to crypto because that I could actually create an impact. And the reason crypto hasn't created as much impact as like neobanking is because there's friction points and it doesn't feel familiar. So what Wallet Connect is trying to work towards is that familiarity, like bringing back the experience of this feels comfortable, this feels like at home. So right now we have a lot of these concepts around like smart sessions, and it's just a fancy word to say like, you're just going to log into a Web3 application just like you would with like a Google or Facebook, and bringing that sense of like comfort and frictionless experience is going to create a much similar experience and emotion that they kind of feel secure like they do with the web today.
When you log into your bank account.
So it's an emotion that we have to earn, not necessarily the features.
So I'd be remiss to not let the audience ask a question. I mean, you all have been sitting here just like receiving information. So does anyone want to, we have a few minutes left before we wrap this up. Does anyone have a question you want to ask anyone on the panel?
Oh, you're so
Yes, yes, well, we have one question.
We have one.
Thanks for to all the panelists. A bit more towards Wallet Connect and a bit contentious given we're in Ethereum space here, but blinks,
Yeah.
right? And no, I don't know if anybody has heard of it. This is this new Solana thing where you can trigger a transaction from within Twitter. And more of an Ethereum guy myself, but I could not deny the UX felt pretty great. Maybe also new scam opportunities, but all in all, it felt like, why haven't we in the Ethereum space not tried something like that? So maybe Wallet Connect specifically, any opinion on it? that kind of UX? Is that something we should go for?
You know what? You know what's the difference between the Ethereum ecosystem and the Solana ecosystem is that whoever runs the show at Solana has a much more big focus on marketing than Ethereum. Ethereum is very focused on the research, on the tech, and then marketing almost comes as an afterthought. And then in Solana, it's just like, let's just do something that causes awe, and people are just gonna be amazed. But realistically, Blinks was done on Ethereum multiple times. It was just not marketed properly. And there's an actual project that was literally just, their whole business was Blinks. It was called Mask. And the reason I don't think neither Mask or Blinks or all of this is gonna like work is because it requires the users to install a browser extension. Like, it's extremely technical to kind of like have the user have to install something in their browser where they don't even understand how browsers work. So either the application adapts itself to be Web3 and have those transactions embedded, and we can use something like Wallet Connect where you can sign transactions inside the app, but having to force users to like, oh, you're gonna sign a Solana transaction on Twitter, but it requires you to have a browser extension installed. Like, how many people actually have browser extensions installed? Like, is that really we're gonna limit the total addressable market of browser extensions installment? You know, there's more people with Facebook accounts than browser extensions. You know, like,
I think if I can add to that, there's a huge difference, at least in my point of view, about the engagement in general and the actual business. And to give a figure that may shock people in the audience, there's never been a point of time where the liquidity inside the Solana ecosystem as a whole was bigger than the liquidity in Aave on mainnet alone. And we are on 7 different networks. So there's a lot of noise and volume and things like that that happen on some ecosystem. And sometimes you see 300 tweets about something. But when you look at the actual figure and the money making, there's not so much. And at the end of the day, what we are trying to build, if you are not just on the very short term and I will say immediate speculation side of things, is sustainable system. And I'm yet to witness sustainable systems that are based only on meme stuff.
I think we have time for one more question, if anyone has one.
Well, that was good.
Yeah, someone in the back.
So just going back to like Aave and like the core business model is that.
Hey, Jack.
Hey. So the core idea is that you have this valuable asset, you don't want to sell it, so you let it out. So that sounds like to me the next obvious step is real-world assets, or some kind of synthetic token track to the stock exchange. And Aave's done Aave Arc. So on that side of the business, how's it going? Is it doing well? What are some of the challenges? And how do you see it evolving in the next year or so?
That's actually a very good question. Thank you, Jack. And I want to salute the whole Lisbon community with you. So, so Aave Arc. For those who don't remember Aave Arc, it was the institution version of the Aave protocol based on Aave v2, which was the previous version of the Aave protocol. And it was actually a good success in terms of onboarding institution in the ecosystem. Aave Arc had 70 different actors, liquidity provider and borrowers or market makers, these kind of actors, that was onboarded on the system. And what we learned from that experience, and it grew to $60 million TVL, which is not so big today, but back in the day, 60 million was, some people would like to have 60 million TVL today, so it was not so bad. What we learned is the huge difference in appetite and in timeline management between the demand side for liquidity in institution. Basically, market makers, they are already on Aave, and they want the liquidity wherever it is and wherever it's efficient to get it. But the liquidity providers, so the people that put money on the table on the institution side, they are very big and very slow conformity and compliance department. So their timeline is not the same timeline than the demand of liquidity. So how do we solve that? And MakerDAO and Aave took somewhat similar path on this. Is, well, if the liquidity provider are slow as fuck, let's replace them and bypass them, because the whole DeFi ecosystem is about making intermediary optional. So if the protocol itself is a liquidity provider, thanks to a stablecoin, you can match the demand for liquidity with liquidity itself. So what MakerDAO has done with BlockTower or other onboard actors is that they created new markets and printed SubDAI to be the counterparty of those actors. And it helped the MakerDAO ecosystem grow a lot. And I think that's a success we can replicate with Go. We are not mature enough yet on the Go side, but I do believe there's big things that will be built on the Aave side with the Go ecosystem with institution this year.
Cool. We are at time. Thank you, everyone, for putting this conference on. There's a lot of work behind the scenes that makes this happen. And we have some music. I don't know if you're going to introduce this, Maggie, but yeah.
We have Latasha here DJing. We have food. We have drinks. You have all these wonderful panelists you can still talk to. So join us over there for a good time. Thank you.